sharing the best financial tips so that you can be more successful with achieving your financial goals. Hi, it's Connie from Prosperity Finance. Thank you for watching this video. Now, recently we had a lot of inquiries from both first-home buyer and investors. I guess it's, low interest rates fault. It probably end up paying less money in your mortgages than your rent. And also for investors, it's really easy to have your rent cover all your outgoings, especially the mortgage payments, given such low rates. However, not everyone can get enough loan to purchase the property. Normally, borrowing capacity is due to two factors, mainly. Number one is the deposit requirement, and that could come from cash and equity. The other side is serviceability. Serviceability means, how much you can afford based on your total household income. Today, I want to focus on the serviceability because I have really good news to tell you in a minute. Okay, so over the last week, we've been receiving two very important emails. One from Bank of China, the other from ASB. So they told us the tax rates is going to reduce, immediately, almost. Now, what does that tax rate mean? So basically, tax rate is interest rate, is artificial rates. The bank use when they assess your borrowing capacity. Okay, so for example, despite the actual interest rate at the moment is around 2.55, but the bank actually use 6 or 7, the highest would be 7.25 to make sure you can pass the servicing. If you can, that's fine, they will approve the loan. If you can't, then unfortunately there will be a decline or reduced approval amount. So that's why some people are wondering, hey, I think I worked out I can afford it based on the calculator that I find online. I definitely can afford a $500,000 loan, but why you say you can only borrow 300K? Well, that's probably the key difference. So tax rates is really important, that which drives the serviceability. So what is the impact as a result of reduced tax rates? So let's use a case study. Let's say Tony and his wife, and they have 2 kids. The wife is housewife. She look after the family, and the husband, Tony, he worked full-time as an IT expert. He's earning 115K a year gross income. He need to pay PAYE and 3% Kiwi saver, and he get the rest of the money. Right. So they are first home buyers, and they are renting for $700 a week. Ouch. So they just wondering if they can buy a home around 1.3 mil, so that they can, stop paying for someone else mortgages. So they come to us, and we use this example to illustrate what is the impact as a result of lower tax rates. So let's have a look. So with, for example, ASB, let's start with ASB. Now, Tony's job income, the net job income on a monthly basis after Kiwi Saver, after PAYE, is $6,757. And they also propose to have 2 boarders at their new home. So they are buying a 5-bedroom, and they want to have 2 boarders to help them with mortgage payments. Now, ASB only at the moment taking 1, and they will discount at 75%. So anyway, on a monthly basis, ASB allow $488 as a boarder income. So their total monthly net income is $7,244. Now, before you can borrow new money, you have to make sure you cover some existing commitments. Number one is your existing home loan repayments. In this case, they don't have any existing home loan. They are first home buyers, and they don't have a credit card. But every household has living expenses. Now, how that calculated is based on the household income and also their family structure. How many adults, how many kids, and also the income, because they believe income does make a difference. The more you earn, the more you spend. I don't know if that's true or not, but this is bank philosophy. So just keep that. Now, the bank also say you also need to make sure you have at least $200 a month to cover any emergency. Okay, so we allow $200 here. So the total expense a month is about $2,324. Okay, so their income that can be used to repay the loan would be $4,920. So that's basically the net income minus the net expenses on a monthly basis. So every month they have $4,900 to pay the loan. Right, so under the old tax rates, they can borrow $724K, but under the new tax rates, they can borrow $782K. The difference is almost $60K, so 60K, yeah. Right, so overnight, they can borrow $60K more, or $58,000 to be exact. So let's have a look, Bank of China option. Now, Bank of China has same job income, because obviously that's exactly what Tony received in a moment. With the border, Bank of China, to be honest, they just, at the same time they dropped the tax rate, they also capped the border to $150. But for comparison purpose, I keep the 200 per border there. So they're happy to take two, and they take 100%, so they don't discount. So on monthly basis, that's how much they're getting. So the monthly net is $8,490. Right, again, they need to less their living expenses. So they are very similar between these two banks, and also they have similar uncommitted monthly income. So what's difference is the income that can be used to repay the new home loan. So that's about 1,000 difference. But what I want to point out is, now under the old rates, they can borrow 989,000. Under the new rates, they can borrow 1.13. So the difference is 145,000. That's huge difference, right? Before and after. So Bank of China, the new tax rates is effective, already taken effect from the 17th of July. ASB new rates will take effect on the 20th July. Okay, so pretty much now, by the time you watch this video, it's already in place. Okay, so what I want you to see is it can have a huge difference in terms of serviceability. In this case, 145 with Bank of China. Even ASB is, 57, so it's still big. But also, between banks, it's a huge difference. So if you get an offer from one bank, doesn't mean you'll get similar amount from the other. It could have a huge difference. Now, I also want to point it out, there's other factors that also drives serviceability apart from the tax rates. So others include your existing home loan. If you do have existing home loan, the details, it actually have an impact on your future loan. For example, the current rates, your repayments, or loan maturity dates, or principal interest or interest-only payments, they do make quite big difference. So if you improve the existing home loan structure, it can have a huge impact on your future borrowing capacity as well. Now, the next one is living expenses. So bank use different living expenses for the same situation. Last one is the border income. Some banks only allow one, despite you have so many bedrooms. Some banks allow two. And also some has a cap amount, some don't have a cap amount, and cap can be $150 or $200, is all different. So a border can make some difference as well. So that's pretty much what I want to say in terms of serviceability change. But if you could improve, go to the right bank, and then improve your existing home loan, you probably dramatically improve your borrowing capacity. So, what are the tax rates under each bank? Well, it's a secret. I will tell you though towards the end of this video. So, before I say that, I just want to have my own opinion, because I hear a lot of people say, oh, it's getting really hard to get a loan. Yes, I think after COVID-19, definitely bank has tightened up their policy in terms of it's really about how stable are your incomes. Let's say if you had a business and the business just recovered from COVID-19, it's probably too early for the bank to get comfort around your ongoing income. Or if you recently had a new job, in the past, if you get a 3 months income from this job, you'll be fine. But now, yeah, it depends what you did before, and probably 3 months not enough. Also, for the existing property you own, for whatever the reason you don't have a rental income, maybe because your family are living there, like your parents or your friends are living there, or your tenants just left, the bank may not necessarily happy to use a rental appraisal, because there's really a lot of noises in the tenancy market. People are not easy to move right now, and we see the rent has reduced in some parts of the country. Yeah, so I would say into these incomes, bank has a closer look at the moment. But if your income are very stable and you can prove your incomes, actually, I think your borrowing capacity are increasing at the moment, to be honest. So that's what I observe, right? So what I want you to take from this video is that if you're looking to borrow money to buy a property and you find it's not enough, and you have a good equity or deposit, it's the serviceability, then it's really important that you need to do the following. Firstly, you need to engage with a very experienced and responsible mortgage advisor as early as possible. Not wait until you see a property you're looking to buy in 2 days. That's going to be too late. Now, use our clients, for example. When someone make an inquiry, I actually look at take a holistic approach. I look at everything, and a lot of the times I recommend they make some improvements or restructure of the existing loan, so that they could be better protection. They can move the equity around to the bank who can lend them the money, and also improve the existing loan so that allow you to borrow more. And also when it comes to refinance, refix, it's really important to think about the next plan, so we know how long we should fix for, and if we should refinance, etc. So these things all need to be taken into account. That's a lot of things to consider. So if you don't give us enough time, we can't really do the best job. So the early, the better. Okay, so that's really important. So yeah, that's probably the biggest tips I want to share with you. So before this video ends, I will let you know what are the tax rate under each bank. Now, I just picked some banks for now because you're not really using 20 banks at the moment. So let's say ANZ at the moment 6.65, ASB 6.45. That's just the rates I use in my example. BNZ 6.75, Westpac 7.25, and Bank of China 5.0%. So you can see it range from 5% to 7.25%. And I expect there will be more banks looking to reduce their tax rates, so there will be more good news. Okay, so stay in tune, because if that happens, I'll let you know in the first instance. So thank you so much for watching, and I will see you next time. Bye for now.